This is Professor MoneyPigTrading. Today is March 4, 2021, a former PhD drug researcher, now a data scientist and trader. Today is a midweek summary usually for members, but since the market is pulling back really hard, people are panicking. We'll make this video open to the general public and hopefully it helps. And today we're going to mainly focus on, is the market like March 2020 collapsing all over again? So if we look at the SPY chart today, you can see it actually pulled back for 3 straight days. And today is breaking the red line EMA support on the daily chart. And at one point, it actually dipped back to 370 and pushed back up. A lot of people are panicking. I know a lot of YouTubers now are calling like this is a market collapse, blah, blah, blah. So today we're going to discuss those data. And the data right now doesn't look like it's March 2020 over. So this is a pretty bad day for the market. We manage the algorithm and the machine learning models that we built. Actually managed to have 11-day trading and have 7 wins. Swing trading, well, basically our strategy is to hold the leap contract like a few months away and holding the near-term put options. And of course, the longer-term call option definitely got hit today, but we managed to take some profits. And also the near-term put like XLK, which is a tag ETF, and CCIV, I can actually get some money. So it's generally not a bad day, or managed to make some money. But yeah, long-term investment and swing trading in general definitely get hit a little bit, but nothing to worry about. But what happened today is bond actually continued to sell off while the US 10-year Treasury yield continued to go up from here. And you can see today actually jumped all the way from about 14.5 to 15.5. This is the US 10-year Treasury yield STXN divided by 10 is the interest rate. And because when people are selling bonds, because they are expecting inflation to continue, and the inflation continues, the bond interest rate will be lower than the interest rate, then buying bond is losing money guaranteed. So that's why when the economy is going to recover, bond market expecting the bond market bonds to recover, and therefore inflation is going to go up. So therefore they're selling bonds, and because bonds become less attractive, bonds interest rate has to go up to attract more people to come back and buy the bonds to rebalance the market. Because right now the bond has more seller than the buyers, right? So the interest rate just keep going up. And what really happened is before that, we're going to have a real quick disclaimer. We're not registered financial advisor, blah, 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 education purposes. One thing I forgot to mention in the previous video is March 4th to March 23rd. In the past 10 years, SPY on average pulled back 5 times, on average pulled back 2.7%. So SPY is actually the weakest season. March is the weakest SPY season throughout the year. Maybe a coincidence, or maybe there's some reason behind it. But we can see it actually happen again in 2021. This is pretty interesting. So what happened today is actually Federal Reserve Chairman Powell had not Wells Fargo, but Wall Street Journal conference call. And you can see my assistant couldn't get a decent screenshot for a good facial expression for both gentlemen. Apologize. And yeah, it's a really interesting conference call, and the URL is provided there. So basically what Federal Chairman Powell says is the same thing again, like I mentioned in the previous video. He keeps saying right now the inflation rate is currently at 1.7%, and he believes it will be below 2% for quite a while. But after reopening, which is upcoming, the inflation rate will go up naturally. And I think the algo trading, just read this sentence like too sensitively, like because this, inflation is going up. Okay, sell, right? But they didn't read what Powell keeps saying again and again. He believes, and the Federal Reserve believes, that employment is still very high. So inflation cannot go all the way higher from here. And therefore, they don't plan to increase the interest rate until first the job market is back to normal, which he thinks it probably won't happen until 2023 or 2024. And also, the inflation rate has to be above 2% until they increase the interest rate. So right now, they don't see that happen, at least for this year or perhaps next year. And so they will keep inject liquidity to the market to support the market, and they don't plan to increase the interest rate. So he keeps saying the same thing. The market doesn't buy what he says again, like today. And I can see his facial expression when he just keeps explaining it all the time. Like he's like, okay, I don't know. I'm saying this 1,000 times. Why the market just doesn't understand? So like, okay, at least Powell, Mr. Powell, I think I understand you, but I don't know why the market is continuing to panic. But based on the number the Federal Reserve provided, right now the inflation rate is about 1.7%. I do expect personally, in my humble opinion, the 10-year Treasury yield might push back to above 17 or around $18, because that's the inflation rate, right? The bond market doesn't want the bond interest rate to below the inflation rate. Otherwise, the bond will be the money losing guarantee. So we could expect at some point, I don't know if it's going to happen tomorrow or it's going to happen this month or a few months later, gradually, slowly, that TXN will slowly go out to 17, 18, which I don't think we need to panic, because when the stock market continue to go up in 2018, 2019, the 10-year Treasury was actually traded at 20, 30, that's like 2-3% interest rate. So I wouldn't think okay, if we go up to 18 or 20, it's like the end of the world, as SPY is going back to 300. I don't think that's the case. And the other way to look at it is we actually got a Federal Reserve SOMA data Thursday at closing. So interestingly, in our previous video, we mentioned at the beginning of each month, Federal Reserve will inject liquidity and money into the SOMA bank account, and they use this account to primarily purchase a bond market to lower the 10-year Treasury yield and to support the stock market, right? But we're seeing this March 4 data, we're seeing actually this account actually drop. And that means Federal Reserve reduce the balance of this account, provide less support to the stock market, and the 10-year Treasury yield just continue to go up. Usually we see that happen at the beginning of each month, like I said, but it is kind of delayed right now. However, we're seeing since August last year, every time there's a drop in this SOMA balance, we're going to see a 2 weeks of follow-up of a balance increase. And if that happens, of course, we'll have to see in the next 2 weeks. If that happens, that should provide a strong support for SPY, and that should put down a 10-year Treasury yield. And we're putting this on our website, this chart, so feel free to check, and I'll provide the link down below in the comment section, this description section. Feel free to check there. And whether this is market March 2020 over again, we have to look at the longer time frame of the SOMA account balance from Federal Reserve, which is the red line, and the black line is SPY. And you can see when the stock market collapsed, you might not be able to see the date very well. So this is February 2020 when the market collapsed really hard. The Federal Reserve didn't inject that much liquidity. However, starting in March 2020, Federal Reserve sit down with the U.S. government and said, okay, we need to help the market. So they actually see how much money they boost the market by putting the SOMA amount. And currently, they still haven't reduced this SOMA bank account amount. So the stock market continue to rally. And we don't see any reason, and like Powell says again and again, they will continue to support the market. So we really don't see why this red line SOMA is going to drop significantly back to, like March 2020 level and make the market have a really big correction at the moment. So based on this chart, when we look at the longer time frame, I still think the SPY should hold up, unless, of course, Federal Reserve pull the trigger. But again, we don't see that case happening. And the other way to look at the data is looking at the dark pool and option data. The dark pool exchange is exchange data that like hedge fund or bigger funds, they want to transact a lot of SPY or stocks. They cannot do it through regular exchange. Otherwise, that would just blow out the price on either side, right? Because they have such a big volume. So oftentimes they use this dark pool exchange to have a large volume transaction without affecting the price in the regular exchange. So let's look at this data. So when 2020, when the market started to collapse, when COVID started, on February 18, 2020, we see actually in the dark pool exchange, we're seeing the SPY. This is the SPY data, by the way, in this whole chart slide. SPY had a really big volume on the sell side in dark pool exchange for 5 continuous days. And here's the SPY price. And we can see there are some really large SPY put volumes coming in as well. On February 20th, which is this day, SPY actually had a $20 million worth of put volume from the institutes. And actually, I didn't show the data because of the space. In the following days, like February 25th, 26th, we're seeing a continuous few days of like 20 million institute bought SPY put, 30 million put. However, if we pull the time frame to now, like the past 5 days, we're seeing the dark pool volume that the institute sell SPY is way less than what we saw in early in February 2020. Like today, we're only seeing 8,000 shares, so that's like how many, 8 billion or something, 8 millions sale of SPY. Compared to February 24 last year, we're seeing 2 continuous days of 14,000, 13,000 SPY shares being sold. And right now, we just don't see that dark pool volumes. And also, actually, on March 1st, Institute actually had a net buy on dark pool exchange. Compared to like February last year, we have 5 continuous days of sale. So dark pool exchange data tells me that this is not like a March 2020 over again. And if we look at the option data from the institutes, again, we don't see very large volume on the SPY put. March 3rd, we're seeing a lot of puts, but we also see a lot of calls as well. And if you look at February 20th, 2020, you will see the put and call option ratio is about 5-1. And while March 3rd, we're seeing a lot of SPY put, but the ratio is kind of like 1.4-1. So it's not the level that will worry. Today, we're seeing about 1.8-1. It's a little bit a lot of SPY put. Of course, we'll have to see what happened tomorrow. But again, like when the market collapsed, we're seeing like a continuous few days of SPY put into like 7-digit dollars amount of SPY put bought by the institutes. So again, option market we see some early signs of perhaps market dip lower, but the dark pool exchange data and the Federal Reserve SOMA data so far suggest otherwise. And where can we get the dark pool data and the option data? Our partner Flow Ago actually had a really nice interface. And if you use our link, I'll put it in the description as well, you will get promotion $25 for 3 weeks using their product, and you can get all this information yourself, and you can do your own research. The other key event, like I mentioned in the last video, is the unfarm payroll tomorrow, 8:30 a.m. Eastern time. If it is reported better than expected, inflation will probably continue to go up. The bond market will probably continue to sell the bonds, and that will pull back the SPY. So that's definitely one thing we'll have to keep an eye on it tomorrow. So the conclusion for the current market outlook is the TNX 10-year Treasury yield might climb back to like around $17 to $18 to match the current inflation that the Federal Reserve provided. So potentially, if that happened like tomorrow or early next week, SPY might pull back to 368 to 370 level, but I highly doubt we'll pull back further based on the current data. However, if the data change, I'm happy to make the next video to provide the update. And from payroll tomorrow is the key, and we'll continue to monitor all the key metrics that we presented in this presentation. For the current swing trading, I remember the strategy is still the same. We have a leap call options with stop, and also the put option to hedge. I'll continue to hold the put options positions and take profits when the market continues to sell off. And also our day trading program is kind of like a hedging as well, right? When the market goes down, we play the volatility by put option, make up 100%, like we showed in the first few slides. For long-term investment members, while you're long in stocks, we're actually adding long VXX and TNX just to hedge our long positions. So if the market is really dipping even lower, we actually have this slide. Don't have time to go through all the ticker. Those are the most favorite names in each sector that we really like. This will provide a perfect opportunities for us to buy the dip. Biotech, I think I forgot to also include Eli Lilly, which has an Alzheimer drug approval decision or phase 3 clinical trial decision later this year, which is pretty big. Feel free to take a look. And also, if you're new to our Discord community, we actually have a popular stock on Discord channel where we mine an 18,000 Discord server to provide you every 15 minutes interval what are the most popular stocks on Discord. So feel free to take a look at that channel. Hopefully that will guide you a little bit about trading and the market. And this is our swing trading performance. We actually just released the February data. We have 48 trades. The winning rate is still 63% lower than our best record January, but still pretty decent. With on average 46% per trade return, which is still pretty nice, less than January, but still pretty happy about it. If you haven't followed us on Twitter, make sure to, just like what Jim Cramer does, shout out our content. Twitter is MoneyPigTrading, YouTube, Instagram, all MoneyPigTrading. Chinese versions will come in with the suffix CH. If you like our Discord channel, check our www.moneypigtrading.com. Happy trading. See you next time. Thank you. Bye.